Good morning, natural gas. It's Wednesday, January 14th, 2026. I'm Tim Beggins, president of Elk Trading Company. And for the spot February natural gas, it's down. Currently, we're trading at 318, down 23.6 cents now, down 318.20. Keeps moving, 318.77. We're down about 24 cents or a little bit over 7%. So it is shifting quickly here. What's going on? Well, supply is sitting at 113 BCF, but we've lost 2 BCF in the last day from LNG. It's down to 17.3 BCF, according to Celsius Energy, and that was at a record high just 2 days ago at 19.3. We've got problems somewhere at Freeport and Corpus Christi. We don't know what the details are on that yet. We'll dig into that a little further, but with the warmer temperatures, the bearish storage report will come out tomorrow. Expectations -82 to -87. That compares unfavorably to both last year at 237 and the 5-year average around 146. So we've got warm weather, bearish storage report, suddenly bearish news on LNG, and we've got too much supply. Why? Because that was ramping up for Corpus Christi Train 4 and Golden Pass Train 1, which will be coming online in this quarter. So right now we are down, and the RSI has turned lower. So again, we're trading at 317.10, down 24.8 cents. So let's turn to the hourly chart. And as you can see, we have not been able to rally above 350 yesterday, and it just collapsed here overnight. We are in oversold territory on the RSI for the hourly chart. Our current support here comes in at our last support level at 3,111. We're currently below our secondary support at 320 and 4 ticks. So things are bearish. They look to be bearish for a while. We don't know what's going on with those 2 LNG facilities, but that is weighing on the market again. Let's turn to the front to back spreads here. This is the Jan versus the April. This is the injection spread, and that spread has blown out once more because the front has collapsed, and we're up 6.4 cents to 163.10. And that is up over 4%. The RSI is trying to turn to the upside. So we've got resistance here, which was our 168.80, and that was exceeded, and then it failed. But now here we go again. What else is going on? Crude oil. Look what crude oil has done in the last few sessions. It's broken that down trend line, and the RSI has turned higher. We still need to get it in this area here between 63.40 and 65.30 roughly, because that's about the break-even cost for the marginal barrel of oil. We're still below that, which means that we'll get less associated gas if that continues. So watch that resistance area. If it can't break through it, we'll be back down again. And here's the weather. This is the GFS model. This is the wind chill factor as of this morning, and it's quite cold at the end of the month. But look what's going on. It's still warm over in the southeast. Brings cooler temperatures to Texas, but look at this disparity here between Dallas around 26 degrees wind chill to 68 in Houston. And this is on the 28th. We'll see if this holds because the models are again diverging slightly. And here's Europe. And as you can see right now, currently we've got that cold air in Eastern Europe, especially over in Ukraine, Belarus, and Russia. And as we progress, that colder air does sit there. It doesn't really come quite into Western Europe. It seems like we've got some coming through here around the 18th and 19th, but then it just seems to fade back again as we go late into the period. So there's another blast here on the 22nd, and then it starts to fade back again. Hopefully it's building back up. It is still below normal, so they're still pulling well from LNG and natural gas stocks. And here's China, and this is the colder temperatures we talked about yesterday, which are around the 22nd, where we start seeing some colder air starting to push into the eastern provinces of China along the coastal regions, and Beijing is sitting right there, right on the edge of that cold Siberian air. And let's turn to the United States, where we still got decent snow cover across Canada, but we're starting to fade a little bit here in Alberta and Saskatchewan. And as you can see, the Great Lakes, well, they're starting to fade. because we're down to 5.9% ice cover for the Great Lakes because of these warmer temperatures. And this La Nina, where we get wave after wave and then warm after warm, is really not helping to form ice across the Great Lakes. And here's the stocks. This is the oil and gas E&P sector. Stocks between $2 and $10 billion and have a high short float. And look what's going on. Because of that high short float, it's got rocket fuel for the oil sector, which has been up for the last few sessions. So Murphy, Magnolia, Northern Oil and Gas, all sitting here at really nice movements here for the 1 week performance. But natural gas stocks, not so much so. So again, recapping here for the spot February contract. We're currently trading now at 1580, down 26 cents or over 7.6%. Let us know your thoughts in the comments section below. Please hit that like and subscribe button. Thanks for listening. We'll see you tomorrow.